So it's been about 16 months since my last video. And guess what? We still have a housing bubble. It's not crashed yet, but things are starting to change. Hope you're doing well, guys. Randy Patrick here. Welcome to Housing Bubble 2.0. It used to be news of the week. It's like news of the year maybe these days. I'm actually going to try to start doing videos again. But what have I been doing for the past 16 months? Real estate, all right? Not been talking about it, been doing it. Slowly working through the market, laying out the groundwork, building relationships, building a better system, moving forward deals. We got a ton of properties in the pipeline that we're working on. All of them distressed, probate, short sales, foreclosures, whatever. That's what I've been doing the past little while, okay? And guess what? Things are only going to get worse, which means it's going to get better depending on your perspective. Now, guess what? Realtor.com just came out with a map here of the 10 slowest housing markets in the U.S. Okay, I wonder what they are, but we can see down the bottom right corner where I live, 4 of the top 10 are in Florida. Let's take a look at what they're saying here, all right? So, number one slowing market is Nashville. The reason being, they're looking at, year-over-year change in median days on market and median list price. So they think Nashville is the number one slowing location. You got Miami next, Orlando, Tucson, Arizona, Jacksonville, Florida. I've been up there a lot lately. Columbus, Ohio, Las Vegas, Nevada, Riverside, California. That whole Riverside, San Bernardino area is always an apex center for foreclosures. Tampa, where I live, and Raleigh, North Carolina. So this is what I guess NAR is saying. Realtor.com, National/Realtors. These are your markets that are cooling off or slowing the most in the U.S. Now, of course, you're going to see different perspectives on this, but I want to bring us back to some reality here, okay? Talking about the housing bubble. If you don't think we're in a housing bubble, then let's take a look at this chart. This is the most recent Case-Shiller National Home Price Index, okay? It looks, you've got two kind of peaks here in the chart, okay? The one in the middle is the 2006 peak, and we called that a housing bubble. If you go to the top right, that's where the market has increased. So you can see we have the peak at 2006. We got a trough around 11 and 12. We kind of had a higher linear pace of growth on property value appreciation. And then when COVID hit, looks like it's kind of exponential, little up and down there, and we're back up to the highest level right now. So yeah, I guess we're a housing bubble. And if you want to really figure out exactly how far ahead we are, well, this is the corresponding bar chart to that line chart, and it shows that the national index is, so we are 79.4% greater than the previous peak. So we're 79, almost 80% greater in value across the board than we were in 2006. So again, I always go back going, we called that a housing bubble. Why can't we call this a housing bubble? Simple as that, right? So it is difficult. It's unaffordable. And there's a lot of things going on in the marketplace. Now, we're seeing a different mix of properties. So clearly, this is the most recent National Association of Realtors, so NAR's, existing home sale graph. And this basically is what's called SAR, your seasonally annualized annual rate of sales. So where we are today, or the most recent, which is the June data. July's not out yet. It'll come out probably a third or fourth week in the month here. But the June data shows that we're roughly around 3.9 million transactions for the year, which takes us back, a number of years ago. And you can see, you can just see the volume is down. So what's happening though is we're having less sales, more days on market, more homes coming on the market. We have high interest rates, so people aren't buying like they used to. But when we take a look at why values are peaking, it's because there's a change in, I think, the mix of sales. This is one of the charts from NAR, and you can pull this up on their website. All right, it's all public information. But you can see that there's a significant increase in the 500K to over a million K segment of home sales. So what's happening is we're having less home sales historically on a monthly basis, but the mix of higher priced or expensive homes is actually happening right now. So it's moving the median price and the values up because it's taking more and more of the mix of what's going on a monthly basis. So, that's basic rudimental, math here. But if you start delving into it, you'll see that, anything over 500, values increasing, 750 is increasing, obviously anything over a million is increasing. Now, again, this is across the board. Clearly, in different parts of the country, you're not going to see this many $1 million price, volume of sales over the $1 million range, right? Northeast, West Coast, you're going to have a lot of that. But again, this is the national numbers they're looking at, and we can see that median price and everything sort of getting pushed upward with respect to what's going on with the property mix across the country. Simple as that. So anyway, guys, I'm back in business here. Going to start doing a lot more videos. It's time. As I said, been busy, still am busy, busier than I've ever been. But we're going to get back to the video things here. And listen, this is a hack channel. I know it. I don't have great graphics. I don't have media people helping me out. I just make this up and do a one-take wonder. So if you like the information I provide and want me to provide more information, please subscribe and like the video, etc. Powers that be have had my channel sort of shut down or I guess you could say managing the growth, so to speak, over the past while. That's why I stopped doing videos, but we'll see if that continues, and I'll hopefully do a lot more in the future here. So to go along with what happened with NAR, we've got Redfin. So Redfin recently posted this. They're going to talk about their top, the markets they're doing well and the markets that aren't. So we're going to go from 1 to 50 or 1 to 49. And obviously the chart there, the left-hand side, the red-orange, is the markets that are doing well. The blue stuff is the markets that are cooling. Just with a quick look on the map here, you can see there's lots of blue: Northwest, Texas, California, Southeast, Florida, and you see where things are really growing or where there's opportunity, price value appreciation, activity, etc. It's kind of like in your upper Midwest and Northeast. Apparently, Milwaukee is the place to be right now if you're looking to invest or buy, because they have some good appreciation. But Las Vegas came in as the fastest cooling U.S. market. All right, so it's cooling faster than any other U.S. major market, with home sales down 10.2% year over year and inventory up a whopping 44.8%. All right, it's taking longer to sell and longer for things to go under contract. So Las Vegas is the, I guess, coldest market. Okay, you could say that. Apparently, according to Redfin, Sacramento is the second fastest, followed by Denver, Fort Lauderdale, Orlando, San Diego, Miami, Seattle, Washington, and Oakland, California. So again, you're looking at places other than Denver. You're looking at, Florida and basically California, okay, and Seattle, West Coast stuff. So that's where the activity's been. So when you have high appreciation or fast appreciation, when it comes up back on the other side, it's going to be slower and it's going to drop a lot more. It'll be much more obvious, and the statistics will be much greater or extreme, comparatively speaking here. So this is sort of the chart. Again, look this up. All this stuff is public data, guys. Everything I talk about, I don't make this stuff up. It's all public data. You look for it, it's there, right? So Redfin analyzed the 50 most populous U.S. metros and basically ranked them from 1 holding up the best and 49 cooling the fastest. So Milwaukee's up there. It's holding itself pretty well. Chicago's up there. Philadelphia, Minneapolis, New York, Cincinnati, Detroit, Newark, and Pittsburgh. Now, when I look at some of these markets, I'm like, why are they holding up so well? Well, guess what? A few years ago, these markets were tanking, or they had already tanked. A Chicago, a Detroit, those are locations, and Philadelphia possibly, like those are locations that just didn't do well, and they have been floundering for many, many years. So when things change on a positive note, it's going to look, comparatively speaking, look like, hey, it's a happening place to be. So that's what's going on there. And again, you can take a look at, we got some California stuff here, Indianapolis, New Jersey, Cleveland, etc. Go down the next little bit here, Houston, Nashville, Fort Worth, San Jose, Portland, San Antonio. So we're kind of seeing some stuff happening. Now we get into more of towards the cooling side. So Jacksonville is cooling. Tampa, where I'm at, is cooling. Listen, Tampa, we're losing value, and we've got lots of days on market. Lots of sellers are putting seller concessions or price dropping, and we have just more and more inventory coming on. So that's what's spurring the decrease in value, and it's only going to get worse. Oh, I forgot to circle one, West Palm below that. So Jacksonville, Tampa, West Palm, and Florida. All right, interesting locations there. The last slide, Oakland cooling, Washington, D.C. cooling, Seattle, obviously, Miami, of course, San Diego, Orlando, Fort Lauderdale, and we got Denver, Sacramento, and Las Vegas. So really, if I look at the past two slides, we got six in Florida. We got a bunch in California, right? So this is Oakland, San Diego, Sacramento. If we go back here, we've got LA, Riverside, Anaheim. So, this is not surprising. So the markets that typically appreciate the fastest also depreciate or slow down the fastest as well too. And the locations, the states, the regions, the same as last housing crisis. Okay, Nevada, Las Vegas. Okay, you're going to see it taking a hit. Obviously, Florida taking a hit, California taking a hit. All right, I would assume that at some point in time we're going to see Phoenix. Again, Phoenix, and we saw Tucson up there in another chart, the Realtor.com chart slowing down. I'm going to assume that Phoenix is going to be slowing down as well too. So stuff with fast, big, larger appreciation, populated areas, etc. A lot of investors, a lot of speculation. They're the ones that are going to have the downward push, etc. So nothing to be surprised about here, guys. It's pretty much the same as before. Just we're a little farther down the road here. So, and again, note, I used to have long videos. I'm going to try to keep them under 15 minutes now, guys, just because I know that, people don't want to hear me rambling on for an hour or 30 minutes, etc. But a lot going on here. I could do 2 videos every day about all the interesting things that are happening in the marketplace, all the statistics that are going there. But first of all, if you're looking to mess with distressed properties, what I mean by that is pre-foreclosures, bankruptcy, short sales, tax liens, okay, foreclosure auctions, code violations, etc., then you need to have some data. Go to gethousingdata.com. That's gethousingdata.com. There's a 7-day free trial there. Good price. It's pretty economically priced, and this will give you a little bit of a litmus. You can check anything across the country where what's going on here. It's going to give you names and addresses of locations and properties that you can actually market to and go after. So I can tell you that the majority of these people that are facing foreclosure, their home's not for sale. It's not on the market. They don't know what to do. They need people like you and I to help them out of the situation, settle their debt, and move forward. Okay, so you can get some cheap data that's effective to figure out what's going on here. Now, I keep revising this here. So this is what I do. Okay, so this is the top pre-foreclosure or foreclosure methods to earn income and build wealth during the next housing correction or crash. All right. Now we can debate. I'm not going to do it right now. Are we in a correction phase, a reset, a crash? I mean, it doesn't matter. Okay. I look at it going opportunity. It's kind of the reason why I gave up with the about 16 months ago doing the videos, because I'm going to focus on opportunity. Why am I talking about stuff when people don't really care to listen? So hey, what the heck? I'm going to be doing deals, and we're building a pretty significant pipeline. To me, it's just like 2007 right now, where the market's kind of capitulating. We see all the signs. I'll do a subsequent video really going in deep and compare the two markets, or the two eras, I guess you could say. But here's what you should be looking at: foreclosure auctions if you want to buy at the auction. Bank owned are called REO, real estate owned. Now, foreclosure auctions, if it's auction and the third party bidder doesn't buy it, goes back to the bank. All right. Then sometimes they're going to appear on subsequent third party websites. Sometimes it'll be on your local MLS. Right. You can purchase them bank owned. A lot of these homes are beat up though. Obviously, short sales and short payoff, that's a great market opportunity here. There's tons available. What I mean available, they're not listed on market. They're under the radar. You got to connect with the homeowner, but that's where the real value is, okay? Obviously, you guys have all heard about purchasing subject to the mortgage. A lot of times you can take down these pre-foreclosure properties if you take them over properly subject to the mortgage, all right? We'll talk about that in future videos. Homeowners Association, Condo Association foreclosures. The condo market, especially in Florida, is having a real hard time. If you're a cash buyer, you're going to be able to pick up some great deals. And there's some new things I just was reading prior to making this video about, the government, like FHA, not wanting to guarantee or warrant condo sales. It's going to have another impact in the marketplace. All right. Tax deed foreclosures. You don't pay a property tax, you can go to foreclosure. There's a whole other industry doing that. Probate estates. Guess what? People pass away. They pass away and their homes become available. They pass away without doing probate, okay? So there's some niches there you can work in. Zombie homes, drive around town. There's always going to be some abandoned homes. Most of them are in the foreclosure process. Underinsured property. What I mean by that is, hey, you had a flood, a hurricane, fire, some sort of natural disaster. You know what? You weren't in a flood zone, but you got flooded. Your insurance isn't helping you here. What do? So there's some great opportunities to help people get out of that mess and to buy stuff at discounts, okay? Code violations, obviously you don't cut your grass, you leave junky stuff on your front lawn, code is going to come after you. Some of these code violations could also be telltale signs of more problems behind the scenes, like someone's passed away or in foreclosure, etc. Bankruptcy, more and more people are having economic difficulties and they're declaring bankruptcy, right? So I can talk about that for ad nauseum because we deal with a lot of these people in these similar situations, right? Novation is kind of a nice way of what we call wholesaling. It's a more elegant way of wholesaling, retail buying program. So you're essentially wholesaling and being allowed to put it on the MLS, so to speak. Surplus is that, again, if a home is purchased by a third-party bidder at the foreclosure auction, and it goes for more than what the final judgment or what the home is owed at the end of the foreclosure, that's called a surplus. The homeowner is entitled to the surplus, and there are people who go out and help the homeowners, obviously for a fee, to try to get them that money because most of them don't know they have this money coming to them. And what we call, last thing, is distressed note buying. What I mean by that is there are people who have private mortgages, maybe institutional hard money lenders, etc. And guess what? They're not getting paid anymore. Investment loans aren't getting paid. There could be some great opportunity to buy these notes, and you become the bank, and then deal with the players because you're buying the distressed note at a discount, etc. So this is the long list of opportunities that you could or should be looking at. We look at all of these in our business, and as I said, properties that we work on, we have facing foreclosure. I'm doing a short sale on it. It's got an HOA lien. It needs probate. It's got a code violation. The homeowner declared bankruptcy for it. Like, see, a deal that I'm working on could have multiple things on this list happening at any given time, and you have to manage all that minutia, etc. But that's part of the fun of the deal. No deal is different. It's all about helping homeowners and helping ourselves at the same time. So there you go, guys. Listen, I'm back. I'm back in business with the videos, and if you want to get a hold of me, obviously drop me a line. That's my email. It's the best way to get a hold of me. We can chat. But going forward, I'll be very clear. I'm going to talk about more stuff happening in the marketplace. I'm going to talk about why we're positioned just like 2006 and 7 for a some sort of housing disruption, whether it's a correction, crash, crisis, whatever. Something it's happening, and it's going to be metro specific. So maybe you're in New York City, you're not feeling as much as you are in Austin, Texas, for example. Okay, there's going to be different dichotomies between the markets. All right, so that's what's going on here. So anyway, once again, appreciate the time. Subscribe if you like the video and want to support my channel, and drop me a line if you want to talk. All right. So anyway, guys, nice talking to you. Look for more stuff happening and some new media things. Trying to learn all this stuff. Okay. Again, I focus on deals, not on things like this. So please enjoy my hack channel, and looks to talk to you guys soon. Bye.